Hi, welcome back. Happy fall. Today we are talking tax deductions, and specifically we're talking about what tax deductions you can take from your home. So first, we're going to talk about without a business. If you do not have a business, but you do own your home, there are some deductions that you may or may not be taking: your mortgage interest, your property taxes, maybe sales tax on renovations, and maybe some energy credits. The mortgage interest, property taxes, and sales tax all depend on whether or not you're itemizing. We did another video on that not too long ago. I will link that up above. So let's change gears and move into business. If you have a business, there are two different types of deductions that we'll talk about today, and the first one is the home office deduction. For the home office deduction, you may take a portion of your home expenses against the business, and this counts if you have space in your home that, first of all, is being used regularly for your business, and that can mean you're doing your administrative work from this space in your home. It could mean that you're meeting clients or customers or patients in this space in your home. It could mean that you're using this space as storage space for product and you don't have any other place to manage your business. So not only do you need to be using it regularly, you also need to be using it exclusively for business. So this space needs to be only used for business. It can't be space that you have a TV in for your kids to watch while you're working. It can't be the place where you play video games when you're not working. It has to be exclusively for your business. It doesn't necessarily have to be an entire room, but the space that you are deducting has to be exclusive. Really important. So with this home office deduction, what are you deducting? Well, we've already talked about mortgage interest and property taxes. It could be your rent, insurance, utilities, homeowners' dues, maintenance, a portion of your purchase price of the home in depreciation, all of those expenses of maintaining your home throughout the year. Those expenses are all prorated by square footage. So at tax time, the things that we need are how many square feet are you using regularly and exclusively for your business, how many square feet is the house as a whole, and that information is used to prorate all of these expenses. Alternatively, you can take a simplified method which just says how many business square feet do you have, are you using, and take $5 times that. There are limits, but it's simpler than going through and adding up all of your utilities for the year. So that deduction is taken against your business income. If you are operating a business that's taxed as a corporation, that math that should happen, and your business should have an accountable plan to reimburse you those expenses. That reimbursement is then tax deductible on the business side and not taxable to you personally. If you are taxed as a sole proprietorship, it happens on the tax return. So a couple of odds and ends about this home office deduction. One, this deduction cannot create a loss. So if your business already had a loss for the year, this deduction cannot make that loss more. But it can carry forward into the following year. So if you have a loss, you still want to calculate that home office deduction and know that it will benefit you in the future. The depreciation portion that we talked about, that portion of the purchase price of the home, that portion will impact your profit on the sale of the property later. So definitely something to keep in mind. It's usually minimal, but it's something to keep in mind. So why are we taking this home office deduction? Why do we care? Partly because we're moving some of that mortgage interest and property tax from itemized deductions, which we've talked about before, may or may not actually be benefiting you. It's moving it over to be a business expense, which is reducing your self-employment tax, so reducing that 15% Social Security Medicare tax. It's allowing for you to deduct some of your utilities and maintenance on the home, which otherwise wouldn't be deductible. Another big reason why we want to take the home office deduction is that if your home office is your principal place of business, the place where you operate your business, then your business mileage tracking can start at home. If you go to run errands or go to visit customers at their location, all of that mileage is now business mileage. Whereas if you had a separate office space, your mileage from home to your office is commuting and not deductible. So there's one other way to take a deduction for a portion of your home expenses, sort of. And it's one that gets a lot of traction on TikTok. So I want to mention it. It's termed the Augusta rule. And what it says is that you can rent your home to your business for a portion of it, use of the yard, something. You can rent that to your business. If it's less than 14 days in a year, then the income is not taxable to you personally. So the business takes a tax deduction for it. It's not taxable to you personally. A couple of caveats on this. There has to be a legitimate business purpose for the business to use your space, to use your home. And it has to be not excessive. So you have to look at the fair market value. So for instance, if you were going to have a corporate event, you were going to invite all of your employees together to have a gathering, some sort of event with your employees, and you would pay, several $100s for a venue somewhere else, you could instead rent the venue from yourself, rent your home to invite your employees in and to have this event. Pay yourself those dollars. They're not taxable to you. You get the tax benefit. And that's legitimate. The court case that came out recently, the taxpayers were trying to take very large deductions to have their shareholder meetings at home, and it wasn't reasonable as far as the tax court was concerned. So it's something to be careful of. But where this rule really comes from, that people are using to their business benefit, is that if you say you live near a fairgrounds and the fair goes on for 2 weeks during the year and you rent out parking spaces on your property during the fair, if that's less than 14 days, all of that income that you just received is tax-free. And that's a really great benefit for you. But there is certainly some room to use this to your benefit for business as well. Just know that you can't do both, right? You can't use the home office deduction and also take the Augusta rule for the same thing. So definitely some coordination to do, some things to think through in how you're using your space and how your business can best benefit from your use of your space. That was a lot of words to try to explain some very complex concepts in a very short period of time. What questions did I miss? What can I explain better in a future video? What questions do you have? Let me know, and I will see you again next week.